Well, hi there, Sean Humphries here. Welcome to All Things Retirement. Well, in this installment, we're going to continue with our discussion on stock investing and how to be a successful stock market investor. In this particular video, we're going to talk about what's the stock market. When I ask you the question, what comes to mind for you? Now, if you're a sophisticated investor, I think this will be a good overview for you. But if you're relatively new to investing, or maybe you've been investing for a long time, but you haven't kind of dug into some of the details, then I think you'll enjoy this particular video. Now, if you're new to our channel, make sure you hit the subscribe button. We're posting content all the time, quite literally on all things retirement, so you don't miss any of the future installments on this video series around being a successful stock market investor. Make sure you hit the subscribe button. Okay, let's lean into what exactly is the stock market. Well, before we just try to define what the stock market is, let's first of all revisit why it's an important topic. So again, we've talked about the reality for people getting ready to retire or already retired. Interest rates are very low, and that is necessitated the fact that many retirees have stocks, equity, or growth investments in their portfolio. And they need those investments because over time, that's the only way they're going to get enough return overall in their portfolio to satisfy the objectives that their account needs to meet so they can fund their cash flow. Now, stocks provide two important benefits. Number one, they provide consistent income through the payment of dividend distributions. And number two, they provide price appreciation potential. So the stocks will grow in value over time. That will help to protect our purchasing power. The other thing about dividend distributions is that over time, companies tend to increase those distributions because most companies, if they're successful, can pass on inflationary trends through prices. Those prices get passed on to consumers, and as those prices go up, so does their cash flow and their ability to pay higher dividends. So again, my question is, what is the stock market? Well, I'll help to define it a little bit for you. I mean, I don't think there's any one definition that captures what the stock market is, but at a very basic level, it's a collection of shares in various companies that can be bought and sold through a market, or what's often referred to as an exchange. We'll talk about that in a few seconds. Now, when we think about the market as well, the stock market can also be defined as a basic measurement or give us some metrics about the current state or health of the economy. So often when you watch the news or BNN, Business News Network, or Bloomberg, they'll talk about the state of the economy. They'll talk about GDP growth in the economy. They'll talk about what the markets are doing. Is the market going up? Is it going down? And generally speaking, the stock market can act as a bit of a proxy for where we are in the economy and the economic cycle. We talked about this before, that stocks and the market tends to look ahead a little bit. So often you'll see the market responding in advance of real economic recovery because the money managers and asset managers are looking ahead and seeing maybe better days ahead. On the flip side, they might look at the data and go, we think the economy is going to slow down, may go into contraction, and you'll see the stocks and stock markets going down as a result of that. Now, the interesting thing about stock ownership and a broad market is that it comes really from the East India Company. So the East India Company was devised in 1604. And it was done as a way for investors to kind of pool or share risk when it came to sailing goods across treacherous open seas. So they knew that not every single ship would reach its intended destination, but they did know that most of them would. They didn't know which one was going to go down, though, or which ones were not going to be successful. So the East India Company allowed investors to share that financial risk by spreading it among various different ships that were engaged in those shipping expeditions. And when we're involved in the stock market allows us to do the same thing very conveniently. So when we look at the stock market, we can buy individual stocks in different companies and different sectors or industries, and that allows us to spread our risk. So rather than putting everything in technology companies, we could put some money in technology or healthcare or retail space or financial services or oil and gas companies. So there's a way of diversifying. So if one sector or one company goes down precipitously, we don't have our whole portfolio going down. Now, another question that comes up when it comes to the stock market is how big is the stock market? So I pulled out a few pieces of information to address that question because it helps to define what is the stock market. If we look at global stock market value, this was November of 2020, roughly, just around the time, just pre kind of discussions around the potential vaccine for COVID. The total market capitalization at that time was approximately $95 trillion worldwide. So that's a huge number. Of the 95 trillion, approximately 51 trillion was the U.S. stock market. So U.S. stock market's a very dominant, huge market. And then if you look at the Canadian market, of course, our channels for Canadian investors and retirees, our market was worth just over 3 trillion. So that was September of 2020 data. So if you're an investor and you're trying to figure out, okay, where do I park my money? As Canadian investors, we tend to be very Canadian-centric. But the reality is most of the global capital is not in Canada. Most of the great companies are not in Canada. Canada is good in a few pocket areas, particularly in the resource and commodity sectors. And our financial services sector is actually very strong as well. But in terms of the broad scope of companies and sectors, it's elsewhere. So one of the first places you want to start is the U.S. and then more of a global kind of exposure. Okay, let's look at one more way that we can sort of define what is the stock market. Another way of defining what the stock market is really thinking in terms of stock market exchanges. So those places that institutional investors and retail investors go to buy and sell stock. So in North America, as an example, the major exchanges would be the New York Stock Exchange, the National Association of Securities Dealers Automated Quotations Exchange, often referred to as the NASDAQ, and the American Stock Exchange, the AMEX. In Canada, the primary exchange, there's a few exchanges, but the primary exchange is the TSX. So we can lump the exchanges into this broad discussion of what is the stock market because the exchanges provide the mechanism for buying and selling stocks and providing that marketplace for those stocks. Now, another way to think about the market, although it's not the market directly, is stock market indexes. So often when you're watching the news, you'll hear the broadcaster or newscaster go, the Dow, which is basically 50 stocks in the U.S., went up or down today. The S&P 500, which is the 500 largest stocks trading in the U.S., would be another index. You've got the S&P TSX index in Canada that tracks the largest companies on the Canadian exchanges. And they give us a bit of a proxy for how the market's doing. So if you're trying to figure out what the market did today, the stock market, you would look to these various indexes that track the value, the capital value, and the change of value of all the stocks that trade on those indexes. Some of the biggest ways that you can participate in the market is typically through institutional investors. So if you look at the totality of money that goes into the market in any given day, it's dominated by the large institutional investors. So it could be pension funds, and endowments, foundations, and then investment complexes or investment firms. Two of the largest investment firms out there would be BlackRock and Vanguard. So both BlackRock and Vanguard have both what are called exchange-traded funds as well as mutual fund products. In June of 2020, BlackRock out of the U.S. had $7 trillion of capital in the markets, and Vanguard on June 2020 had just over $3 trillion. So they were very large market participants. The retail investor, you and I going in through maybe our discount brokerage account and buying or selling a stock is just, we don't even hit the radar screen. It's a very, very small percentage of total stock trades that are going on. Those are the main points that I wanted to really go over with you today on what's the stock market. You can define it in different ways, but in a nutshell, the stock market is a place where buyers and sellers can converge to settle on a price to transact the sale and purchase of stocks. And to do that, you have stock market exchanges in North America and Canada and around the world that facilitate the transactions of buying and selling stocks. As well, the stock market can be a great proxy for how the economy is doing currently and how the economy may do in the future, because the market analysts and asset managers are always looking to the future and parsing through all the data and trying to predict where economies are going to go to. The market's also a great place to diversify portfolios. We talk about the East India Company as a mechanism to diversify those traders, rather than putting all their money in one ship, they put their money in multiple ships and they spread their risk. And you can do the same thing in the stock market, where you can buy different stocks in different sectors to spread your risk so you're not impacted too violently if you put all your money in one stock or one sector. Well, it's my hope you found this particular video helpful in your journey towards successful stock investing and retirement income planning. Now, we've got some great links that are attached to this particular video, so make sure you check the information out, as well as a video that is related to this particular topic. And if you haven't subscribed to our channel, make sure you hit the subscribe button so you don't miss any of the additional content we're creating on a regular basis, but more specifically on successful stock market investing. You take care.